So many of you asked me to do a video on Apple, to review Apple and try to determine if it's still a good buying opportunity, even though after we had a pretty big rally from around $125 per share. This is what I'm gonna try to do in today's video. And I personally don't own Apple at the moment, but I owned it many times before. The last time I bought the stock was whenever it crashed in 2018. I remember buying Apple around the 16 PE ratio, and now Apple is trading around 26 times earnings, which is again a pretty big difference. And I have a history of selling those stocks too early, and I did sell it too early before we had the big moves after March 2020. But I'm gonna review Apple in today's video and try to determine if it's a good buying opportunity or not. Now, to get started, Apple really, missed bad on earnings. Whenever they had their earnings in February, their EPS, they missed. It was down around 11% year over year. Revenue was down 5.5%. It was pretty much a disaster for Apple, yet Apple didn't go down, which made a lot of people believe that maybe it was all priced in whenever Apple went down in December of 2022, which is still possible. But nonetheless, it was a pretty bad quarter. And Tim Cook, the CEO, said that it was a bad quarter due to two main things, but I'm going to talk about one of them in this video, which is the dollar was very, very strong, and it took off a lot of the growth that Apple would have had if the dollar was pretty much the same on a constant currency basis. But since then, since pretty much November, the dollar has been going down. It looks like it peaked and is starting to go down, but it has strong support around the 101 range. If it does go below 101, then we have a high likelihood of us going maybe sub 95, 97. But needless to say, the dollar has peaked, and in the second half of 2023, those companies like Apple and many others like Nike, which actually saw a lot of headwinds in terms of the dollar, are actually going to see tailwinds, and it's going to benefit them instead of hurting them like it did in 2022. So this trend is now Apple's friend, I believe, in the third or fourth quarter. Normally it lags a little bit, but they should start seeing currency gains instead of currency losses, and this will really help out, them not missing that much on those quarter. But it's due to a lot of things, also around macroeconomic issues and many other things. But a big problem for Apple right now is actually their production. Most of their production is still in China, and they had a lot of problem in China in terms of the whole COVID lockdowns, the supply chains and stuff, and there's a lot of geopolitical issues between the United States and China, and they are trying to invest in countries like India to try to diversify away from China. And of course, this is going to be a little bit expensive on the company, but they are trying to transfer. But from now till they will be able to actually get away from China, this is a big problem on Apple in case there was any additional tariffs or any type of a economic war between the United States and China. So this remains a big risk for companies like Apple and for companies like Tesla. And looking at their income statement, again, it wasn't the best in the world. Operating expenses pretty much went up a lot. Gross margin went down. Net income even declined. And if I show you, any company with such numbers was declining net income, trading at 25, 26 times earnings, you would not be buying it. But this is Apple. And the main reason for that, again, had a lot to do with the currency headwinds and many other things. Now, taking a deeper look at the valuation, now Apple is trading around 25.5 times earnings, forward earnings. So this is even their forwards. Their trailing earnings around 27 times earnings. Now, Apple traded at a mean of 18 times earnings. And I personally bought Apple around 16 times earnings in 2019 or late 2018, 16 times. The average is 18, and now it's sitting at 25. So Apple is sitting way beyond its historical average, and it actually topped around 36 times earnings in August of 2020. So it's still much higher than their historical average, but Apple is a much different company than what it was before March 2020. They have higher returns on capital. They have many different products. They pretty much bring up. They have their services income, which is now huge, very high margin. It's actually their services, I believe, was the only one that actually grew. The iPhones pretty much declined, and Apple's market share even increased a little bit in iPhones, but it declined. Their services still remains the best, so they have higher return on capital. So this might justify a higher valuation for Apple, but I believe it's still a little bit overextended at 25 times earnings. And the company has been returning a lot of value to shareholders in terms of buybacks and in terms of dividends. But if we look at their buybacks, the shares outstanding since 2016, it was around 22 million shares, and it's been pretty much going down ever since. And again, this is pretty amazing from Apple, because most tech companies like Google and others, they actually have a lot of stock-based compensation, and even after they buy back, their shares don't move too much. But Apple has this actually under control, and maybe this is why Warren Buffett actually prefers Apple over Google and those type of other companies. To not waste any more time, I'm going to get into my valuation model to determine if Apple is a buy at such price or not. I have pretty close to $400 billion of revenues for 2022. The analysts, they have a 0% revenue growth for 2023 and around 8% from 2024 to 2027. Now, I put in 2% for 2023 just because I believe those currency losses, they're going to become currency gains, and Apple should be able to sustain around 2% revenue, although it could decline, but I put in 2%, and 7% sustained from 2024 to 2027, which I believe you guys can agree it's pretty fair. So net income margins for Apple right now are 24%, so I left it at 24%. For a PE ratio, I have 25, which is the current PE, and as we talked about, it was trading at a mean of 18 times earnings, but it has higher return on capital, it has a little bit better margins than what they had before, although Apple could realistically trade around 20 to 22 times earnings, below 25 times earnings, 5, 6, 7 years from now, because it's going to be a more mature company, and maybe the growth is going to start to eventually slow down, which would warrant a lower multiple. But for the sake of this video, I'm going to keep it at 25 times earnings, and this would give me around $3.1 trillion market cap 5 years from now. The current market cap is $2.5 trillion, and that would warrant around a 42% on the upside, which include actually a 3%. It's not a dividend, it's a buyback. So it's buybacks and dividends together if the company repurchase around 2.5% of its market cap, and then the rest is a dividend, so it's a 3% estimate. In total, the upside is 42% from such prices, or 8% compounded every single year for the next 5 years. Now, to me personally, that would show me that Apple is expensive at such prices, unless you are looking for an 8% return every single year or a 10% maximum, and you're satisfied with that. I mean, you could actually buy Apple and get such return. But to me, Apple is very expensive at such prices. And for me to get a double on my money over the next 5 years, which what I'm trying to look for, I try to look for doubles every 3 to 5 years, I would have to buy Apple around $100 per share, which $100 per share would actually be lower than its 52-week lows. It would be pretty close to around, what they were trading at in 2020. Now, I'm not sure Apple is actually going to $100 per share, but the maximum I'm willing to pay, like the absolute maximum for Apple, for me, is around $120 per share. I'm not paying more than $120 if I was forced to buy Apple. So I believe Apple is very expensive at such prices. I know this video is going to get a lot of, dislikes, but I'm not here, to please Apple shareholders or to please anyone. This is just my opinion, and this is just basic math for me in this valuation model. It's showing me that I cannot double my money over the next 5 years with Apple. So I believe Apple, for me, it's not a buy, it's expensive. I would buy it at a maximum price of $120 per share. Unless you're looking for an 8% annual return, then maybe Apple is something you should consider. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.